Thursday, January 16th, market analysis. Stan Ehrlich, good morning. I start out with the stock market indexes, as you know, and go to futures and sometimes other topics. I got something new in hogs for you today, and that's toward the end of the recording. So, the E-mini, very big up day yesterday in indexes, probably the beginning or a day or two ago of a rally that's going to end up making new historic highs and maybe before the end of the month. But because of the size of the rally yesterday, we probably did a little too much too quick. And here we are bumping against a bearish trend line at today's daily data high for the E-mini. And looking at the 1 minute data, this is the high of the session, made just about exactly midnight, California time. We have made a minor, but there's no downside follow through, a minor new low for the session, and it's just gone sideways. So the market is basically resting. Same kind of commentary as you would expect for the spider, except the spider, because of its much shorter trading hours, 6:30 to 1 o'clock California time, left a gap behind when it popped up on the opening yesterday. So because of that, I am looking for a expected dip back down to 585, 20, 15, to be more exact, 5,800 exactly. So may take a few days, may take a couple of weeks, but relatively soon, I'm looking for a gap closure and a move back into new high ground. I think it could be sooner than later, but I'm very, very bullish, and it's bumping against a bearish trend line also. But again, after a really big up day yesterday and the 1 minute data stalling out just a little bit, sort of, I wouldn't be surprised if it popped up in a new high ground and kept going up a chunk by the end of the day today on a Thursday, maybe 4 points, nothing great. On the other hand, I wouldn't be a damn bit surprised if it started to come down to close that gap, which I fully expect. I just don't know exactly when it's going to start to do that. Now, on the QQQ, we have a gap also. Same trading hours as the SPY. And we need to come back on the QQQ to close the gap to about, 51010-ish to be exact, 51015. So, and that was the high the day before it gapped up. So it's bumping against or coming fairly close, or did. Now it's about just slightly lower on the day. Came close to its bear trend line. So that's a bear trend line test in everybody's case so far. And the 1 minute data doesn't show too much, but there's a gap that needs to come down and fill back down to 51015. Yep. Okay. Now, because it was a 23-hour market, NASDAQ futures don't have gaps, nor do the mini for that matter, or the YM. But we do have a test of the major bear trend line almost exactly at today's high. And where are we going now? We're slightly lower on the day. So, in fact, you might say we have started the correction back to fill the gap, but there's no gap in the NQ. Remember, it's in its parent symbol, which means the Qs. And again, keep your eye on that in order to possibly pick off a turning point in the futures. 5, 10, 15 is the magic number for the QQQ. And for the YM Dow, no gap futures, but still expected to come back down. I'm not plotting or showing you the INDU, for example, just the YM. But I would expect there would be DIA, be a gap on the DIA, but I don't plot that. I don't analyze that anymore. Now, Doji, nothing going on, quiet, resting, but it just might start to drop down quite a bit. Well, not quite a bit, but to the high of Tuesday, period. And then it should hold. That's going to be the important level. Next, going sideways. And next is the Russell 2000, Doji, very much so. We are now starting to look like between a rock and a hard spot. Support below the market is held 1, 2, 3, 4, 5 times basically, and pop back up to the resistance area 1, 2, 3 times essentially. And here we are smack in the middle. I'm waiting. Next, don't have much to say about the Russell at the moment, but bonds. We had, and I told you so in detail before it even had its bullish key reversal on Tuesday. And although it's not a huge range, these things don't have to have big ranges to make it the low for months and months to come, maybe. Even big ranges sometimes fail. Even small ranges produce huge results. This is a possible huge result forecast. We do have what I believe is a possible double bottom. It's not that great. And that would be, of course, from the low that was in October of 23, year and a half back, almost, a little over a year, and last Tuesday. Bullish engulfing ER buy signal turned the price level, price action green on a daily data chart, and we are long from ER1 overnight from Tuesday. Now, doing extremely well already, and we also have an ER3 that, wow, kicked in a fantastic purchase yesterday on the opening at the low tick of the day. I think that was 110.30, pretty sure, because it opened slightly below our bid for ER3 scalp and ER3 overnight. ER3 overnight is doing great. Also, ER3 scalp made, I think it was exactly $1,500 in one day yesterday in bonds. 10-year notes did not have a bullish engulfing, so it does not have a buy signal. And another comment about bonds, we pretty obviously have to close real soon above 114.23. Then you've got a little resistance slightly higher at 15.15, 115.15. So after that, I think we're well on our way up to 120-ish. And of course, on a longer term, a month or two from now basis, that should be challenged and maybe start to get above that level also. Maybe 3 months. 10-year notes. It's going to be about the same thing. We have a much better double bottom long term on 10-year notes. The yellow, gold or yellow line represents the previous low made back in October 23. And we barely got below it in the last 2 or 3 days and jumped up away from that support level, previous low. Much more likely and easily called a broad double bottom for a year and a third or something. So if we're on our way up, it's going to do the same thing as bonds, get up to resistance levels, maybe stall out, maybe get a little overbought, pull back a little bit, can't go too far, too long down, and then shove up again in a new high ground, just like bull markets behave. Next, crude oil, overbought and resistance yesterday, did end up producing a short-term high. And I do want to mention again, yesterday's bullish engulfing, but in overbought condition, plus the fact that it was in a resistance area, caused me to mention Bass-Ackwards reversals, which I am not sure exactly how to handle. But so far, it already got below yesterday's low. And we are down a chunk. And I'd like to see another couple of days down, which look very plausible. And then I can call it one of my reverse Bass-Ackwards, so to speak, reversals. Again, I don't know what to do with this exactly. I just see them happen too often that work pretty good. Next, overbought conditions in the heating oil continue to cause me to say, don't chase this market up. It can open and drop like a rock all of a sudden to the next day, and you bought it on the close today. Ouch. Don't chase, and I consider this chasing if you're buying up here, markets. We're up against resistance. We're quite overbought at 91.2. Gosh, I want to really emphasize a very strong likelihood that we're about to turn down sharply. Next, natural gas. Hit the resistance level a few days ago, has been creeping up a couple of days now into the resistance area. I still think it's going to turn down and start to close below the low, which was about 3.735. And that would, if there's no high in the meantime, cause me to be much more sure about claiming that January 13th was the high day, which I still think is correct. Next, gold, silver, platinum looking pretty interesting now. We have broken out for the whole day today above a major bear trend line, which was the top of a pennant formation. Pennant formations, I've said before, are classically a continuation formation. What was happening before the pennant started? Well, it was in a bull trend. There you go. Continuation formation, approximately 2/3 the way toward the tip of the pennant we are. That's classic timing. And so far, it's a very strong up day, stopping around highs in the last couple of months. So maybe today, but in the next day or two, I think we're going to be closing above the high of 12.24, which, by the way, was an outside down day. Unfortunately, very close to overbought. And if it was up just a little bit more, we would have had a bearish engulfing on that day. So that was a really close potential. That one also pretty close, not as. Nevertheless, this is a bullish breakout in all classic manners. Coming back down to the neckline at whatever price it will be in the next week or two would be possible, or some say 50% from whatever high we get to, retracement. And then the new high ground is typical formation or typical price movement for this kind of market situation. We obviously want to start closing above the high of 12.12, I believe I said. Yep. And then attack the highest high and keep on going. Next, silver. Bumping against its major bear trend line, kind of like gold did yesterday. Not overbought, could stand a little bit more strength. And if that happens, you got yourself a breakout, especially if it does it on a big up day like gold. Heavy volume, up day, profound information. Maybe it'll be tomorrow, and you can't rule it out all of a sudden at some point. Sometimes it just happens so quickly. So I'm obviously looking for a move up into the resistance area and then maybe a lot higher than that over time. But we don't have quite the same longer term picture. But it's definitely friendly. I would say bullish in a light way. Platinum is a different story. Platinum just can't seem to get a long term trend going in the last 3 years. We have lower highs, 2 of them. We got sell signals exactly on the top day. We've got a support level that has been outrageously good on a fairly wide basis, and we're back into it again. So platinum could rally, like I'm implying gold might continue to do, and silver the same, basically. And we're in support. So I don't see anything wrong with the turning around here and starting to move back up again, but let's see what we get. We're only up 1.0 at the moment and no reversals. And we're not even oversold, so kind of iffy at the moment as to whether it's going to immediately turn up or not. It could work a little bit lower for several more days. Next, overbought conditions in copper up against resistance today. It looks like a very interesting place for it to turn down again. Could squeak up a little bit more. We're not quite at the high of the day, and that's good enough. We're good enough. So at its high today, or possibly a little higher, 4.48 maybe, maybe even 4.49-ish. Next day or two, still overbought, then turned down. But we should be very close, if not having hit it today. Next, we've got the beans, oil, meal, corn, wheat, and something new in hogs coming in a minute. Soybeans, now retracing after being overbought and making new highs for months. Coming back to the previous trend line. Now, that could be today's low, an okay place for it to turn around and start to move back up, testing a previous important trend line, bull or bear. So there's also the possibility that it could come off a little bit more. I'm saying 07, 10,007. If that happens in the next day or two, it'll be below the line. But if it happens in a week or so, it'll still be above, maybe above the line. Now, we can't afford to close below 978. That would change the picture or begin to change the picture, possibly completely. So it kind of depends upon how it gets down there also. So I'm expecting it to bottom out between 10,007 and today's low. Next, we've got overbought conditions and resistance yesterday in soybean oil. No surprise, it took out the low of the last 3 days all of a sudden, but it's not staying that soft. I mean, it's kind of almost in the middle of the range, a little bit below. Down 91, granted, good down day, granted, but I'm not turning bearish. This is a correction back down to approximately 44.14, and I can't rule out 42.60. But I am expecting it to hold on this downside technical correction, in my opinion, and start to head higher again. We do have a longer term possible head and shoulder bottom in wheat. I mean, soybean oil. And it has already moved drastically above, dynamically above its last little double shoulder, sort of double bottom shoulder, which also was the case way back here, by the way. The symmetry is pretty decent. Should you take the middle of this trading time frame as the low of the head? Some people might consider doing that. Normally, it's just flat out the lowest low day, period, August 16th. And then measure to the left to how much time you got, and measure to the right. Is it about the same amount of time? Well, this is a little more just visually and fairly obviously, but not too bad. You got yourself an upward slanting neckline. That's not too bad also. It would be very bullish, and this would be up to the tune of approximately 61, low 60s for soybean oil from the mid 40s. Quite a big move if it happens that way. Next, meal, possible triple bottom in a major support area, but it's the bad boy of the group. It today has made a new low for the last, it looks like 3 weeks, 2 weeks. And it is very close, again, to breaking major historical support. It's got to basically close below 285 or 295 right now, about. So soybean meal had better turn around and start to head north again real quickly and around these prices, time and price wise, or it's in jeopardy of doing something nasty on the bearish side. Corn, already broken out of a head and shoulder bottom. We talked about this for weeks and weeks now. Has already been halfway up to its minimum upside objective, 495-ish. Stalling out because we were overbought for the last couple of days, and I wouldn't blame it for doing so, and right around a resistance area. So pulling back down to 460-ish wouldn't surprise me and be fairly normal. The neckline is the level at which you don't want to get below or close below 447 3/4. So anything above that is relatively safe ground, but it looks more likely going to be, 459, a little bit below 460. Next chart. Wheat. Is it forming a broad double bottom from August of last year to the last month or so? If we can start closing above 555, I'm liking it a lot. But right now it's dribbling back down a little bit today, but nothing major. It's still in the sideways range, which could be the last low area on a long-term basis. And then we're going to obviously, if I'm right, come all the way up to 635 and challenge that level. And that's just the breakout of the double bottom formation. And I haven't measured it yet, but eyeballing it, something up here looks highly likely in this major resistance area. It was up there just last May. So why not? Okay, next. Cattle. Overbought condition, minor little double top, starting to break out to the downside. Looks like it's going to have a new low close for the last 4 days, and we did have a new low. I just need to see a little bit more weakness, expecting a move down to about 194 and maybe as much as 191. But the long-term trend is up. I don't see any significant high here. No major top per se, no major signals. Just this is the beginning of a short-term downside correction and then higher. Hogs. I don't know why I didn't see this earlier, but I've just this morning outlined the first shoulder high, November 1st. The head of the formation is the highest high, November 27th, and December 23. So this is about a 2-month formation. Is the last shoulder high, approximately right on time. I think it's only 1 day off. I've drawn in the neckline for you, and we broke it and did it correctly on December 30th. Big down day, classic breaks below the line. I didn't see it for some damn reason, but into support. Got oversold. Here's your retracement the last few days. So now a fresh start, so to speak. We're just beginning to come down from the resistance level, the neckline. We should get down to at least a minimum downside objective of 75.75. And from the original breakout level, we're still almost there, just a few ticks lower. So this wouldn't be necessarily a bad spot. Your conservative protective stop would be, oh, I don't know, maybe a little under 84, but around 84 or a hair higher. Think about it. Next, we've got SQ. We did get to my objective on the head and shoulder top, and that was the end of last week. Monday was the lowest low, not quite oversold, but very close, but at the bottom of a support area. And we just had fulfilled the previous day a downside objective. So it just plain old every day turned around. Price wise, at the bottom of support, I thought there was a chance of that. And no oversold condition and no reversal, but there it popped up 2 days ago, yesterday, and again today. Great. It did close the gap I told you about. I expected that. So now we're continuing higher after the gap closure. And I like that if I'm going to continue to be more and more and more bullish. So now it's a matter of watching for overbought conditions and where they might occur price wise. And obviously 93.73 is one area of concern. And the highest highs up here at around 98.85. Those are two levels that come to mind immediately for resistance. And back to the E-mini. What are we doing? Can I fall asleep now? This is just going sideways and very, very quiet. You guys have a great trading day and profitable trading to you.